Common mistakes in QuickBooks Online and how to fix them. All right, so about myself, real quick. My name is Hector Garcia. I'm a CPA certified information technology professional. I'm in South Florida. I'm an advanced certified QuickBooks Pro advisor. I've been teaching QuickBooks for quite a while. I have a master's in taxation and also member of the Intuit Premier reseller network. So I sell and resell QuickBooks Online, QuickBooks Enterprise, et cetera, to many of my clients outside of my regular practice. All right, so some of the best practices are before going in there and making any cleanings or any adjustments, I recommend that you print all the reports in PDF, at least the P&L, the balance sheet, AR aging, AP aging, inventory reports if you're going to be messing with inventory, because QuickBooks Online doesn't really have a backup and restore system. You may need to resort to a report if you have to revert any of your changes or something like that. The other really important thing is you don't want to log in with your client's user ID and password, right? You want to have your own user ID and password, sign in as an external accountant or as an accountant user through your QuickBooks Online accountant. That way you can actually keep track of what the client did and what you did. And this is useful for both knowing who did what, so in terms of an audit trail, but also if your client disputes the fees that you're charging or the time that you spent, the audit log lets you know how much time you're spending on the file if you ever need that information to be able to bill out your fees or something like that. Also, you have access to the accountant tools. Those are only available through QuickBooks Online Accountant. So things like batch reclassify and write off. We'll talk about the reclassify tool here. They're only available as an accountant, which means you have to log in as an accountant user logged into QuickBooks Online Accountant. Now, you may want to have the client understand the changes that you're making. Okay, one of the biggest mistakes that a lot of accounting professionals do is tell the clients, "Don't worry, do it however you want to. I'll go at the end of the year and I'll fix it." The problem with that is you're getting yourself into a vicious cycle of having to always fix problems, which gives the client no confidence over what's in their QuickBooks file until they get to see you, the accounting professional, or they don't learn, right? And they'll just be making the same mistakes and over and over and over. And unless you're in the business of fixing client errors, and that's what you do for a living, I understand. But I think for the long term, we want to make the shift from making changes into giving advice. So you may have to incorporate your client in some of those changes, explain to them what you're doing. Some of the things that I do is I record my sessions of changes and I send a video back to my clients so they know exactly what I did. For the ones that are interested, some of them really are not. And also to be able to keep your client's costs down, your cost, you may want to just train your client how to fix it. And you may want to do multiple sessions. Sometimes, I just charge for training, quote unquote, to actually log into the client and show them how to fix errors. So it's a couple of common best practices so you're not in this never-ending cycle of always having to fix issues. Okay, so let's talk about the first common mistake. So the first common mistake is redundant accounts. So either you have more than one account that mean the same thing, or you're making them a sub-account of itself and you're not really using it correctly. So we're going to discuss the accounts, the detail types, merging them, and then deleting and making them inactive. So let me go ahead and move on to QuickBooks here. And I want to make sure that you can see my screen. So Wendy, can you just confirm with me that you're seeing QuickBooks Online on the screen?
Yes, we can see it.
Okay, perfect. Thank you very much. All right, so let's talk about a chart of accounts in general. So I'm going to click on the gearbox up here in the top right or the settings button, and then I'm going to click on chart of accounts. And then I'm going to modify one of the account names just to kind of show you what I mean by redundant accounts, okay? Because in some cases, like this sample file doesn't really have a lot of redundant accounts, but I'm going to change the name of one just to kind of illustrate, what redundancy may mean. So for example, you got this account here called purchases and this one called office expenses. So I'm going to change the name of this one real quick to office purchases. And then I just want to illustrate when I look at a profit and loss, what would happen if you're looking at two accounts that essentially could mean the same thing, and what are some best practices of fixing those. So I'm going to click here on the reports menu, on the reports tab here on the left, and then I'm going to go into profit and loss. And then I'm going to go here with this transaction date. I'll click all dates because I really don't know when that transaction happened. So I'll click on updates, click on run reports, and then I'm going to scroll down and potentially see office expenses and also office purchases. Let me see. I got office expenses here, 1808, and then it looks like office purchases is not being used. So I'm going to go ahead and just do a transaction to show you. So I'm going to create an expense, and then let's say we went to Office Depot, create the vendor here real quick, and then let's say my client used a redundant account here, office purchases. So I'm going to go ahead and click save and close, but let me put an amount here. I'll put here $21, and I'll do save and close. So as I refresh this report, I should be able to see the $18 and the $21 here next to each other. Okay, so this is a common practice. Let me let me zoom in so you can see right here. So there it is. There's office expenses and there's purchases. Okay, so one of the things that you can do is you can merge them. We can merge the accounts, so we can rename office expenses or office purchases to the other one. That way we can merge them together. Now, the challenge with merging, which I'm going to show you how to do right now, the challenge with merging is once you merge the two accounts, you can't go back. You can't retract. So you won't be able to retain a history. So let me show you two approaches to this. So one approach could be, let me go in the chart of accounts. One approach could mean temporarily choose one of them and make them a sub account of the other one. So I'm going to make purchases. I'm going to click on this little tab here on the right side of the triangle, click on edit, and then I'm going to make this one a sub account of office expenses. Okay, so this is not merging. This is simply just making one the sub account of the other. Now, this still causes a little bit of confusion because when I go create an expense, let me show you. And then let's say, for example, I start typing OFF, I'm going to see both of them. So this is actually still a little bit confusing, but I want to make the point of thinking of this as an alternative for two reasons. One, I'm going to pull the profit and loss and show you the flexibility of having sub accounts instead of having merged accounts. So let me scroll down here and show you. So I have office expenses and office purchases. Now they're no longer two separate accounts. They subtotal under total office expenses. And if I scroll up and click on collapse, okay, hit the collapse button, I can now actually scroll down and only see one single account called office expenses. And then unless I expand it or I click on 3908, I won't really know that there happens to be another account under it. So that's a really important issue to see when you come into this situation. So merging them would be a little bit different. So I'm going to go ahead and go back into my chart of accounts, and then I'm going to search for office purchases. I'm going to click on the triangle and click on edit. And then what I'll do is I'll remove it as a sub account, and then I'll rename it to have the same exact name as the other one. So office expenses. So as long as I make this the exact same name as the other one, once I hit save and close, QuickBooks will actually give me one or two warnings. They'll say, warning, there's another account with the same name. Would you like to merge it? Yes or no? Or in this case, it's asking about detail type. So detail type is a subclassification that needs to match the same subclassification as the other one. So for example, right now, this one is subclassified as supplies and materials. And this, by the way, this bears no meaning from your accounting perspective. This bears other meaning for Intuit's backend to do analysis or organize your transactions. But this subclassification or detail type makes no differences to you. So the fact that it's under supplies and materials is preventing you from merge it into the other one. So I'm gonna hit cancel here and show you. Let me click on office expenses and click on edit. And to show you, the office expenses is actually classified under office and general administrative expenses. So I have to make sure that the other account I'm going to merge into this one bears the same detail type. So let me right click on purchases again, or actually let me click on the little arrow, I click on edit, and I'm gonna remove the sub account. So I'm no longer gonna make that a sub account, and I'm gonna make sure the detail type bears the exact same detail type as the other one, and then change the name to office expenses. And by doing that, when I hit save and close, QuickBooks just detected that you are changing the detail type, so this may change the reporting. And then once I hit yes, it's actually going to say that name already exists. Is what you're trying to do is merge them together, and at that point you get to say yes or no. So I'm going to hit yes, and it's telling you warning, and then it's just asking you to check and double check, because now when I pull up my P&L, I am only going to see one account called office expenses, and that's it. Oops, let me do all dates and hit run report, and then I should see office expenses. Whereas office right here of $39, notice that there's no sub account or nothing to expand, nothing to collapse, nothing to subtotal. Now I want to tell you a story behind why I recommend doing sub accounts instead of merging in some cases. So for example, I had a client that had two account categories. One was called meals and the other one was called food. Okay, so meals and food, from my perspective, is the exact same thing. So I was giving my clients QuickBooks file to work on, and I'm making all these adjustments before tax returns. And I see meals, I see food. I opened up both of them, and they're similar. They're all restaurants, that sort of thing. So I went ahead and I merged them together. I filed the client's tax return. Afterwards, I sat down with the client, and I was just basically training them or teaching them about certain concepts of taxation. And when it came up, the concept of meals while eating locally and then meals while traveling have a different tax implication. For example, if you're entertaining a client locally within 50 miles of your office, that meal would be 50% deductible. But if I am eating while traveling, or even if I'm taking out a client and I'm entertaining them, but while I'm traveling, I'm outside of my 50-mile area, that would be, for most cases, 100% deductible. So I was teaching the client, listen, so it's really important that you create two categories, one called meals or local meals and one called travel meals. And my client said, don't worry, I got it. It's already done. So I have an account category called food. That's for my local meals. And I have one called meals. That's for what you call, Hector, travel meals. So when you do my tax return, just make sure you identify them that way. So basically, I made the assumption that those two were redundant accounts, and I ended up merging them together, and I could not take it back. I mean, I had taken a snapshot of a PDF document of the P&L before I made the adjustments, so I was able to make a journal entry to fix them again, quote unquote. But I couldn't revert my merge. So that's kind of a really important lesson from merging something without asking the client first. So if you are going to go to that process of you think you think they're bound together somehow, you can make them a sub account of each other, or create a general group, make it all sub accounts of it. That way you can just sort of display it or preview it, right? And and after you're sure, you double check, you ask, then you can do the merging. So that's kind of the concept I wanted to tell you. Now let's talk about deleting accounts or making accounts inactive. So for example, let's say that my client doesn't want to use this miscellaneous account anymore, okay, which has activity in it. So I'm going to go ahead and delete the account. So I'm going to click on the gear button, the settings button on the top right. I'm going to click on chart of accounts, and then I'm going to search for miscellaneous, and then I'm going to go ahead and delete it. Now, in the QuickBooks Online world, the button you press is deleted. What this account will show us is deleted, but in sort of the legacy QuickBooks world, we call this inactive. So once we delete it and we try to search it, like if I try to search it here, it won't show up. However, if I click on the little tiny gear here in the top right of the screen, there's a little box here that says include inactive. Now, they are being consistent. They're calling it delete in one side, they're calling it inactive on other side. So you may want to, in your brain, just train your brain that delete and inactive are the same concept in the QuickBooks Online world. So if I click on the little checkbox that says include inactive, then I can actually search it. Okay. The only problem is that it's going to have the big word deleted in there, which could cause a problem. So although this is made inactive is deleted, in this case we included inactive for the purposes of the chart of accounts. Whether I include it or not include it in the chart of accounts is still going to show up in my report. So let me look at a profit and loss here and just show you. There's my miscellaneous, and it has in parentheses the word deleted. Now that can cause some confusion, right? I've had some clients that tell me, Hector, I don't understand what you mean by my deleted miscellaneous. What does that mean? So you may want to be careful with that. Some of the things you could do instead of just delete them and leave the data there is to reclassify those items out of miscellaneous and put them somewhere else. So we'll talk about that a little bit later on in the webinar. That would be a really important thing. Like you don't really want to have any active numbers or any within an active period for the current year. You don't want to have anything inside of a deleted account because it will show up in the report and it will say deleted, which will cause quite a bit of confusion. Okay, so some of the things you could do is you can make that miscellaneous account a sub account of something else, and then collapse it. That way you don't see deleted. So we actually just talked about that, but let me do it here real quick just to show you. So I go into the chart of accounts. I'm going to go ahead and include inactive. I'm going to look for the miscellaneous one. I'm going to click on make active real quick, and I'm going to edit it. And then I'm going to go ahead and make it an expense category, and then I'll make it a sub account of office expenses, again like we did before. Make that a sub account of office expenses, hit save and close. Then when I go back and pull a profit and loss report, I will only see the deleted account. Well, actually, okay, so right now it's right there under miscellaneous. I haven't deleted yet, so let me just delete this again real quick. So let's go to miscellaneous. Forgot to delete it. Go to delete. And let's pull up the P&L again just to show you. So there it is, and it says deleted. But then if I click on collapse and make the report collapsed, and I scroll down, you won't see it there anymore. So it's in there, but because it's collapsed, it's being hidden. So that could be one alternative to deleted accounts, is make them a sub account or something else so you can hide them. So just kind of keep that in mind, that once you delete them, it shows deleted and what that whole thing means. Okay, I'm going to stop for questions for a second. Woody or Wendy, are there any questions for me that I should answer before moving forward? Okay, I guess not. All right, so let's talk about the next topic. We'll talk about balance sheet accounts that are made inactive. Okay, and then not being able to edit and delete transactions that go in there directly, and managing those. So let's talk about those things. So let me go into a balance sheet. So I'm going to go to reports, balance sheet. Now, one of the big problems with deleting accounts in the balance sheet is if I still have a balance in there that I don't need anymore. Let's say, for example, that inventory asset balance there it's been there forever and is not being used. It should be adjusted. Where a lot of people do, a common mistake that they'll do is they'll come into the chart of accounts, okay, and let's wait until that loads, and then we'll go into inventory asset and then delete that account. Okay, maybe not a good example. Let me do a different example. I'm going to create an expense transaction, and I'm going to go ahead and create another one by itself. I'm just going to call it inventory stock or something like that. I'm going to have to create a new one just because the inventory asset account is tied to inventory items, and you may not be able to touch it because it's actually using inventory items. So I'm going to use a different one altogether here. I'm going to give it a balance of 1,500. and I'll make this an old transaction from 2014 or something like that. So I'm going to go ahead and hit save and close. And then I'm going to go back into my balance sheet. And then notice that transaction is sitting there for 1500. And let's say I don't want to see that anymore. So the common mistake that people make is they'll go in here and they'll just delete the account. Okay. And then when I go back into my balance sheet, I'll hit run report. Okay. That balance is still going to be there. It's going to show deleted, right? So how do we fix it? Well, let's do a journal entry. Let's adjust it out. So let's say I wanted to do a journal entry and get rid of it. I'm going to go to journal entry. And then let's say I'm going to adjust this against cost of goods sold. So when I type inventory asset and I'll actually spell inventory stock, notice that it prompts me to create a new account because it's not part of it. So I have an issue that although I know exactly what I must do, which is I need to move, do a debit and credit against it, it's not available here for me to use. So the only way I can make that account active for me to be able to use it is I would have to go into my chart of accounts, make that active. So let me click on the little gearbox, go to include inactive, make this one active again. Okay, go into my journal entry. Okay, now I can use it, make my adjustment to 0. I'll hit save and then go back into my chart of accounts and then make it inactive, delete it again. Okay, so then after we make this, delete this one. Yes. Let me just make sure it's fully deleted. I'll refresh the chart of accounts here and type it again. Inventory stock, delete, yes. Okay, there it is. Then I'll go back into my balance sheet. Right? And that should be, let's just hit refresh here. Let me do all dates. Not sure what date I use for that journal entry. And that will be not there anymore. So that's a really important piece that as you delete accounts in the balance sheet, you will not have access to making adjustments against them unless you make them active, make the adjustment, and then make them inactive again. So let's go to the next topic. Let's talk about Reclassify. So this is often called the secret weapon to find and fix errors. This is only available in QuickBooks Online Accountant. This allows you to change accountants and classes in batch. Okay. The only issue is the closing date, right? So one of the problems is even if you have the books are closed and you're reclassifying something for a previous period, you may want to be careful that QuickBooks sometimes will allow you to make a change even if the books are closed. Now you're logged in as an accountant and you have accountant access, so you're kind of a super user per se. But the average user, if they don't have access to this tool, that's okay. Closing date will protect you for that. But if you're an accountant, you can essentially even change transactions from previous periods. So it's really important to keep mind of that. And the other thing is reclassifying products and services that would retroactively change financial statements. So let me show you how that works. Let me do a couple of examples on that. So the first thing I'll do is I'm going to pull a profit and loss report. Okay, and I'm going to pull it for last month. Okay, and let's look at all of our income components. So we have $6,900 in income. Let me zoom this in. I'm going to go ahead and click on this $70 under pest control services just to show you. So I'm going to go ahead and click on that $70, and that's going to take me to a detailed report that contains all the transactions affecting those $70. As you can tell, we have an invoice, we have a sales receipt and a refund. These two, sales receipt and refund, they cancel each other out, so we don't care about that one. But let's look at this invoice. Now, I can't reclassify those $70 through here because they're being driven by a product or a service. So this product called pest control right here. Pest control, pest control. This item itself is the one that's pushing it into that pest control income account. They happen to have similar names. That's why it's kind of easy to understand. But this item here is driving the account hitting pest control. So let me show you something here real quick. If you click on the More button and you click on Transaction Journal, so right here on the More button and Transaction Journal, you get to see the internal debits and credits per se of the transaction. Oops, let me go back into it. Invoice, and let me click on Transaction Journal. It's not pulling up for some reason. But anyway, maybe because I'm in a sample file, it's not letting me. But if you're in the invoice itself and you go into Transaction Journal, you get to see the debits and credits. And basically, in a nutshell, what I wanted to show you is those $70 are hitting this income account called Pest Control Services. So for me to reclassify transactions hitting a particular GL account, a particular chart of accounts account through an item, I cannot reclassify it in the transaction level. I would have to change how that item behaves. So I'm going to go here in the gearbox, top right. I'm going to click on products and services. And then I'm going to look for the pest control item. So I'm going to type, there you go, there's pest control. I'm going to go ahead and edit it. And notice that this one is hitting pest control services. Okay. If I wanted this one to hit, for example, sales of product income instead of pest control services, I would have to just simply go in the item and change what account it hits. So I'm going to say this one hits sales control income, sorry, sales or product income, not pest control income. So I'm basically changing it here. And then I have two choices. One, I can just apply those changes moving forward for every transaction moving forward, which would mean we would ignore this little list here that says also update this account on historicals, or I can click on this little checkbox that says also update and hit save and close. So QuickBooks will not give you a warning asking you, would you like to change the historicals? You would have to sit there and put that little checkbox in there. Okay. Now, some people change it and they forget to put the checkbox and then they hit save and close. So I changed the way this account is supposed to hit, right? So there's my income account still hitting pest control. Zoom this out. So it's still hitting pest control income right here. Sorry, it got changed to sales of product income, as you can tell here. But when I go back into my profit and loss, notice that my $70 are still hitting pest control services, although I changed it. So what I need to make sure that I do is, let me go into products and services. Then I'm going to go into what's it called? Pest control item, edit that item. I'm going to change the account back to pest control without changing the historicals. I hit save and close, and then I'll go in and edit it and change it where I want it to go, which we said it was sales of product income, and then make sure I hit that little checkbox, right? So make sure that I do in fact hit that little checkbox called also update historical transactions and hit save and close. So what that's going to do is once I go into my profit and loss report, I'm going to go ahead and hit run report and scroll down. I should no longer pest control income is here. And then inside sales of product income, I can click on that category and I can scroll down and see those $70 are right here. See? So that's exactly how I change the category of a transaction that is driven by a product or a service. So most likely something that's going to go in an invoice. Okay. So that's one type of reclassification. It's all driven by items. Let's talk about reclassification that is not driven by items. So for example, let me go down here for a second and let's say that there's $75 hitting legal and professional fees. Let me zoom this in. So you will notice that legal and professional fees have $75 hitting the parent account and $390 hitting accounting and $100 hitting lawyer. So I first of all, I really don't like when you're hitting the parent account directly. It makes it very difficult to sort of measure. So what I'll do is I'll create a sub account under legal and professional called other professional fees, and then we'll go ahead and reclassify those $75 to that category. So let me go into my chart of accounts here. Okay, let me go look for legal and professional fees. There it is. So what I want to do is I want to create a new account under that category. So I'm going to click on new here on the top right, and then I'm going to select this as a category expenses, and then under name, we'll call it other professional fees, and then we'll make this a sub-account of professional fees. I'll hit save and close. Okay, and then I'm going to use the reclassify tool. So again, as I mentioned, I'm going to take everything that's sitting there on the legal and professional fees parent account. I'm going to reclassify that in batch and put that under that other account. So I'm going to click on the little briefcase here on the top left, go down to reclassify transactions. That's the name of the tool. It's called reclassify transactions. So I'll click on that. Okay. And then I get to see here on the left side all the accounts, all the different accounts that are in my chart of accounts. And I see, I'm zooming this in so you can see it, and all the dollar values that are summing up to that. So as you can see that there's those $75 we spoke about. So if I select that legal and professional fees, I notice that's just selecting that one account for $75. I can select it, and then I can click down here in the bottom where it says account to change, and then I can put that under other professional fees. I can put it under lawyer, right? So I can put it anywhere. What I don't want it to be is in the parent account. So I'm going to put it here under other professional fees, and then I'll click on reclassify. And you will notice it moves it out of legal and professional fees parent account, and it puts it into the sub account. Okay. Now the other really good thing is doing multiple transactions at once. So for example, if I go into miscellaneous, notice that there's two transactions here. Let's say that for whatever reason, these two are supposed to hit other professional fees. So I can just basically select them all, then go here in the bottom and hit the checkbox, and then automatically whatever I reclassify to last will be selected. I can obviously choose any account that I want to reclassify to, and then I can click on reclassify and then move those out. And you can do a lot more than that. Like I'll show you. I'm going to go back and show you one that has more transactions. Let's see what has a lot of transactions here. Let's see. See, accounting has three only. Trying to look for something that has more than one, more than three. Okay, that's a good one here. So we'll see here on the meals and entertainment, we have Bob's Burger Joint. Let's say for whatever reason, these are all supposed to be travel. So I can click on the little select all button here on the left of it, top left of it, click on change, and then select travel meals, and then hit reclassify, and that reclassify them right there and then. Now, the only warning I'll give you is these transactions are not going to be tagged in any special way, letting you or somebody else know that they were reclassified from something else. Yes, you can pull it from the audit trail, but it's not as trackable as maybe a journal entry. A lot of accountants like journal entries so they can sign off on them, write their notes. But this is more about fixing errors at the client side level, not so much at the accountant level. And I would strongly recommend that this is something that you show your client how to do correctly. That way you're not sitting there and reclassifying all these transactions yourself. Okay, so let's go back to the slides here. So that's how we change accounts or potentially classes which are not turned on this file in batch, and how to change the categories on products and services. Okay, real quick before I go to the next one, let's see, are there any questions for me, Woody or Wendy? Okay, perfect. Good. All right, so let's talk about common errors in downloaded transactions or with bank feeds. So something that's very, very common in bank feeds, let me just go into QuickBooks here real quick. And I'm going to click on the transactions tab on the left here, and then click on banking. So something that's really, really common is a lot of end users don't really understand the invoice, payments, and posting process. So what ends up happening is they are here in bank feeds, and let's go to the checking account. And let's say, for example, we have $55 coming in, okay? And QuickBooks automatically suggests that you should send this to uncategorized income, okay? So a lot of people just will hit add here, and then basically it sends the transaction into the general ledger for $55 into uncategorized income. Now, the underlying problem with this is that if I happen to have an invoice, let me create an invoice real quick. If I happen to have an invoice for, let's say, some other customer, let's say for this one, for $55, I'm going to put an invoice for $55, and then I'll hit save and close. That invoice is not going to be marked paid. That invoice will still show up, and although they did pay you and the money went into the bank and you accepted it as uncategorized income, that invoice will still remain open from QuickBooks' perspective. So let me go into customers and then go down to cool cars, and just to show you that invoice still shows open. Now, a customer may come in and say, you know what, I got paid on that invoice. Let me go ahead and click on receive payment and receive that payment. Okay, so let's say I did receive the payment and then hit save and close, and then phew, solve the problem. No longer the invoice shows open. Now the problem is that still that payment is not tied to online banking or to your bank register. So the payment is sitting there in undeposited funds. And let me tell you what I mean by that. When I go into reports, I'll click on balance sheet. I'll pick a balance sheet for all dates here. And then I'm going to scroll down and go to undeposited funds. I'll click on that number, and we're going to see, both, debits and credits hitting the undeposited funds account. But we can see here really clearly that that $55 is sitting there in undeposited funds. Now, again, that is not undeposited. That was truly deposited in the bank. So what we need to do is we need to click on transactions banking. We're going to have to undo that transaction that we added from downloads here from the bank feeds. I'm going to click on in QuickBooks, which right here it shows you here what was done, right? It was going straight to deposit. Now I can click on that transaction, and I can look at it and see exactly what it did, right? It selected this random customer. It put uncategorized income, and then I put the $55 there. So what I need to do is I need to undo this transaction. So I'm going to go ahead and click on this undo button on the right side. Okay, undoing it basically takes it away from the check register and puts it back into for your review. But now that is on for your review, notice that it's being matched. Now matching means, yep, I saw a payment for that amount. It's probably this customer. Okay, so by clicking on match, QuickBooks will now accept it and match it together. Now let me just show you something else real quick. I'm going to go ahead and click on the recent transactions button. I'm going to go ahead and look for this payment, and I'm going to delete it. So before I match it, I'm going to delete it and show you what if I hadn't received the payment and I had just done an invoice. QuickBooks will still look through your invoices and suggest you to match it to an invoice, right? So even though I didn't receive the payment, it will also suggest you to match it to an invoice. Now, what if I have more than one invoice for $55? So let's say I want to go into invoice, and then I'll pick a different customer altogether. Let's say I'll pick here Bill's Windsurf Shop, and then I'll pick an item here at random, and then we'll put here $55, take out the sales tax, and then we'll date this for last month, right? Let's say for June, and then I'll hit save and close. So now how on earth would QuickBooks know how to match money coming into the bank to one specific invoice? Notice your matching would no longer be green, it would now be gray, letting you know that I think I know what it is, but there may be more than one. So then it gives you a choice down here. It says possible matches, and then I can choose which one those $55 are actually applying to. That way, that invoice, the right invoice, gets marked paid rather than it not being marked paid, or the wrong one being marked paid and that sort of thing. Okay, so that's how we correct. That's a very common mistake, which is the deposits that end up being mapped to an income account and they end up duplicating your income and not marking your transactions paid, or quite possibly incorrect matches. So again, what are the troubleshooting tools? Here, when I go to in QuickBooks, I can review everything that came in through the banking, click undo, and then go back and select the correct one. The other common issue that could happen is, and let me show you. Let's say I'm going to reconcile all of my June. Let's say for whatever reason, all my June is reconciled. So let me click here real quick and click on reconcile. And then I'm going to go ahead and reconcile my checking account up to June. So I'm going to put here 6/30/2016. And then I don't know what the ending balance is yet. Put that in a second here. And let's say that all my banks are reconciled. And let me put the correct ending balance here from my bank statement. Okay. Whoops. Hit OK. So let's say we're 100% reconciled up to June 30th. Okay. And when I connected my bank, for whatever reason, right, my bank, it's bringing me transactions from before. So notice that I have a whole bunch of transactions from June and May even. So you may want to do is just exclude them from your bank feed. So I'm going to select the first one down here, scroll all the way down, and I can shift click all the way to the one in the bottom. That will select everything in June for basically. And then I can click on batch actions and click exclude. So that would do is that will remove them from my online banking. That way my customer is not tempted to give it a category, because that's already been duplicated. That's potentially going to be duplicated because I already reconciled June. And then I'm going to be able to see them here under excluded. So I can still see them under excluded. If I ever want to go back and say, no, by the way, this transaction, it's it needs to be matched to something or something like that, I can still undo it and send it back into for your review. So for example, let's say I wanted to undo this one. I'll click on undo, and then I'm going to go back to for your review, and then I can still show it here. So if I need to do something with it, I still can. But also notice that there's no matching mechanism. Okay, so for example, if I happen to have this $75 already reconciled and I want to match it with the actual transaction, I can't, because once you reconcile, QuickBooks Online Banking will not do any more matching. So it's really important to understand, the role of reconciliation and matching and how they work with each other. Okay, so those are the common mistakes on the downloaded transaction side. Okay. All right. So yeah. So that's what we discussed. And then let's say bank. Okay. So let's talk about bank reconciliations. Okay. So one of the things that commonly happens is a common mistake. It's issues with bank reconciliation. So let me show you what I mean by that. Let me go back into the reconcile screen. And then I just want to double check that my bank is fully reconciled. There it is. There's my reconciliation. Nothing under changes, nothing under adjustments. So let's say that I modify one of these transactions. Okay. Let me just go into, I'm going to go into checks here, and then I'm going to go back and select a check that's already been cleared. So let's go this one called Hicks Hardware. So one of the common things that happens is I got a transaction that's cleared, it's reconciled, but for whatever reason, I feel compelled to make a change to that. Okay, so let's say, for example, I'm going to change and make this $60, for example. Changing the underlying value of the check itself, I'm going to go ahead and hit save and close. And QuickBooks tells me, hey, warning, there's transactions linked to this. You shouldn't do it. Hey, warning, you're editing something that's been reconciled. And normally we'll just ignore, our customers will ignore these two. So basically, I just changed a transaction that was reconciled. Let me show you with another one. Let's say that I'll select this one. Let's say this one, instead of changing it, I'm going to go ahead and void it or delete it, right? Again, this is a reconciled transaction. I should never be doing this, but this is a common mistake. A transaction that's been reconciled gets voided or deleted. Okay, and notice that it didn't even give me a warning that this has been cleared. So that's another huge problem, right? That doesn't really warn you. It lets you void no matter what. It's a big issue, common mistake. Okay, so let me go back into my reconcile window. I'm going to click on gear, and then reconcile. And then notice that now I got changes here, right? Notice that in here it says changes 11.92. If I click on that number, it gives me a list of the transactions that have been changed. Now, why is this important? Because when I go try to reconcile my next month, my beginning balance is now going to be off, right? My beginning balance used to be 299, now is 310, right? So that's the big issue. So you as an accountant you may have to go back and look at these changes, right? Go to each transaction. For example, this one tells you the amount was changed from 18 to 0, so you may want to click on that and then basically reverse what the client did. So go back and put here 18 point, I forgot what the amount was, 18.08. So I would have to go back in this one and just change the amount, 18.08, save and close, yes. And then once I revert the amount, that no longer shows as a change, right? Basically, it fixes itself. And then once I go to the other one, and I can also do the same thing with this one, I can fix the dollar amount and put it back where it's supposed to be. And that will fix that. Now, this is relatively easy to do when transactions are changed. When they're deleted, it's a whole other story. If you delete them in this report, it'll show you that they're deleted, but you won't be able to fix it per se. You're going to have to recreate it. So let me show you what I mean by that. So I'm going to click on the reconciliation report, and then let's say our client goes in and takes one of these deposits, and instead of voiding them, it actually deletes them. Okay, and then I go back into my screen. There's my changes there. When I click on that 218, there's my deposit, but I can't, even though it highlights, I can't click on it. So I'm trying to click now. I can't click on it. So when a transaction is deleted, in order to fix it, you're going to have to recreate it and re-reconcile it. So you can't really, fix something that's been deleted. That's why the best practice is voiding. Void as much as possible instead of doing a delete. Okay. The other piece is making adjustments. So for example, if I wanted to just fix that by making an adjustment, so let's say, oh man, my beginning balance doesn't work. Let me go ahead and just force it in there. So I'm going to go ahead and force this back to where it used to be. Hit OK, and then click Finish Now. And the system says, hey, wait a second, you're making an adjustment, you're creating a reconciliation discrepancy, and that's a very common mistake that people say yes to this. They click on Add Adjustment, and basically you forced it. That way you can reconcile the next period. But notice that now it's under auto adjustment. So now when you go to your profit and loss report, you're going to see an expense category called auto adjustments. Okay, let's go to the next topic and see if there's any questions. Okay, are there any questions? Any pending questions, Woody? Okay, perfect. No questions. All right. Now, there are other similar mistakes that happen in QuickBooks Desktop. For example, if you pay sales tax through the liability account directly or pay payroll through the liability account directly, that's going to cause problems for that. So let me show you what I mean by that. Is if you have sales tax set up, okay, in QuickBooks Online, you're supposed to use the sales tax module to record your tax payment. So for example, if I have a tax payment due for $370.94, the worst thing you can do is write a check, right? So do write check and then put Board of Equalization, right? Whatever I'll just do EDD here, okay? And I'll put here sales tax liability. Okay, and put that under, let's say, a liability account of some sort. Okay, and then put there $370, whatever it was, and hit save and close. That's a very common mistake. It's anything that has to do with sales tax or payroll tax. You want to use the payroll modules or the sales tax module itself, because when I go back into my module, it's not going to recognize that I paid them at all. right? It's going to show there that I still owe them the money, although it's going to be sitting there on my balance sheet as a payment. The correct way to pay off any sales taxes is to go through the sales tax module and click on record tax payment, and you want to pay it through here and delete the other one that you did. You have to get rid of that one. You have to do the correct process. With payroll, it's pretty much the same situation. Payroll is not turned on in this file, but you want to run payroll liabilities through this module instead of writing a check to payroll liability. The other common mistakes are item mapping. As I showed earlier, we have items pointing to an income account, items pointing to a cost of goods sold account, or to an expense account of some sort. Whatever you map your items to, it's a very common mistake, and you may need to go back and make those corrections. So item mapping is what we discussed earlier, which is selecting the accounts in the chart of accounts that affect those items, and those are going to be driven to through transactions. Opening balance entries are also a very common issue. So I'll show you exactly what I mean by that. So one of the most common issues here is uh, somebody goes into the chart of accounts and wants to enter maybe some of the assets, right? So let's say I have a a computer that I want to see on my balance sheet. Because what I end up doing is they'll create a new fixed asset. It's a very common thing, and we can call it server. Let's call it server, and they'll put an opening balance of, let's say, $4,000, and maybe not pay attention to the date or something like that. And then I'll hit save and close. So what ends up happening is, let me show you. I'm gonna go into the balance sheet here real quick, pull up a balance sheet, and anytime you create an asset with an opening balance, an item like inventory with an opening balance, anytime I create anything on the balance sheet with an opening balance, let me just do here all dates, and then I'll scroll down. Anytime I work with anything with an opening balance, it's going to show up in here. Oops, why is that a negative? Server is a fixed asset. Not sure what I went into the wrong side here, but let me just flip the journal entry here. Not sure why it did that. That's a strange glitch. Anyway, so we have a $4,000 asset there in our balance sheet. Where is it? There you go. $4,000 asset in the balance sheet. And where did the other $4,000 go? They go down here under opening balance equity. I'm going to go ahead and click on that and show you every single thing that I created, something, maybe an opening balance of a bank, or an opening balance of a credit card, or an inventory part with a beginning balance. All those things are going to be thrown into opening balance equity, and then we're going to have basically a running balance there, and that account shouldn't exist. So the common way to fix that is to, assuming that is those entries were done okay. Typically, anything that has to do with old balances before a current period, that should go against retained earnings. So the correct move there would be do a journal entry. So let me just get that dollar amount there, just copy it. If it lets me copy it, I'll just have to remember it. 5337.50. So I'll do a journal entry, and I'll move opening balance equity. Oops, I copy and pasted a lot more. There you go. 5337.50, and then that should go against retained earnings. Again, I know hitting the retained earnings account is something that a lot of accountants are not really fond of. What I'm saying is, if we're entering balances in our balance sheet that have to do with historical numbers, and these agree to our historical financial statements, then the correct entry for this would be, or should be, retained earnings. So once I move it out of there and into retained earnings, we should be able to see the opening balance equity be zero. Okay, so that's a common mistake, is posting things to opening balance equity, and those need to be adjusted against retained earnings.